Good morning, ladies and gentlemen, and a big warm welcome to Maybank's flagship Invest ASEAN 2022. To all of our participants around the world and in the region, it's really been such a long time. It's so good to see all of you again after this period. Whether you're joining us live on-site in one of the 6 on-site locations in ASEAN or virtual, we will be putting on a slew of conversations here today, this morning, that we hope will bring some insights to you into the region. My name is Seng Yao, and I'll be your host and session moderator for this morning. Truly, ASEAN sits at a very interesting inflection point right now. While ASEAN's capital markets have actually performed very well relative to other developed markets and the region, this is largely because of its current account strength, and also because largely foreign institutional holdings have been low since the pandemic started. By no means this is a panacea that the region will be able to escape the fallout as well as the impact of war, inflation that comes on top of a highly fractured supply chain network. Clearly, the transition also from a 15-year low in terms of interest rates will take more than a quarter to unfold. And it is our desire and ambition over the next 2 days to basically drive the conversations to talk about ASEAN's immediate as well as longer-term future in framing a new future. As the program itinerary behind me will show, our sessions are broadly organized into 2 sessions. Day 1 will largely focus on ASEAN's opportunities in terms of navigating in these undercurrents as well as challenges that it faces. In day 2, we'll be taking a very hard look in terms of these paradigm shifts and whether or not the issues in terms of stakeholder capitalism will actually be at risk on some of these ESG initiatives that are already running. And on these anchor points, we will also be featuring a host of other conversations that we'll be driving with central bankers, CIOs, and other capital market participants, covering a broad range of issues from policy framing to investment trends, as well as the new developments within the markets. For our audience here in Singapore, we are also delighted to share that Minister of State, Mr. Alvin Tan, will be joining us at the event later today, this morning, and he'll be making a special address to the audience. So without further ado, let me first invite Maybank's Chairman, Tan Sri Dato' Zamzam Zaraini Muhammad Isa, to officially open Invest ASEAN 2022. Chairman, over to you.
Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning and welcome, ladies and gentlemen. This year's Invest ASEAN theme, ASEAN Framing a Future, puts a spotlight on trends and challenges that will have profound multi-year and even multi-decade consequences. Among the key highlights are the Russia and Ukraine war, China's growing sphere of influence, the transition to net zero emissions, and ESG infusion into business decisions. Today is about framing a future for a prosperous ASEAN, a region that is predicted to become the world's 4th largest economy after the US, China, and European Union. It has the youngest and fastest growing population in the world and is riding the momentum of sharply rising incomes and higher education. To sustain growth, whether in a crisis or good times, ASEAN has to follow through with inclusive and equitable development, leaving no one behind, facilitating genuine shared prosperity and unlocking opportunities for competitiveness. Transitioning to a more digital, borderless, and low-carbon economy will challenge us as jobs may get displaced. But we must know the economic benefits will prevail. People across population segments must feel hopeful and be able to move into new opportunities. Capital markets must be more vibrant and lead with intent. Because we know a diverse and equitable ASEAN will be a sustainable ASEAN. Ladies and gentlemen, this takes leadership from you as captains of industries and institutional investors to step up and become the leaders that ASEAN needs. As board members, C-suites, and chief investment officers, you have the ability to make an impact. There is a growing realization of the importance of sustainability in ensuring a just future for all. We need to continuously work within our organizations to embed ESG principles into our decisions. These can include diversity, equity, and inclusion, or DEI policies and practices for boards, senior management, and organizations as a whole. Not only is it the right thing, it is backed by a sound business case that has proven to be rewarding. As leaders, we must include more diverse voices, people who may not look or sound like us, or who did not go to the same school, and who can nonetheless contribute meaningfully. Increasingly, investors like yourselves are probing investees about their ESG and DEI practices. Many are voting against boards that are not diverse and who do not do right by their stakeholders. Regulators such as Bursa Malaysia and SGX are also requiring issuers to disclose more about diversity and inclusion as they form part of materiality assessment for sustainability. Leadership for ESG and DEI starts from the top in the boardroom. As the corporate sponsor of the 30% Club in Malaysia, I can attest that we are already on the move. Still, on average, women hold less than 20% of board seats of public listed companies across ASEAN, but I'm optimistic it will change quickly. We are committed to this cause as a steward of the ASEAN opportunity. At Maybank, we are integrating DEI initiatives into business outcomes. We don't claim to have all the answers, but we have a plan. As an achievement for the 5th consecutive year, Maybank is one of 4 Malaysian public listed companies and amongst 418 across 45 countries that have been included in the Bloomberg Gender Equality Index. Ladies and gentlemen, the Year of the Tiger is an apt time to be the leaders that will frame a future for a prosperous ASEAN. At Maybank, we are pleased to have Datuk Khairul Sadiq Ramli now leading our group as we work collectively to drive a sustainable future for ASEAN. Thank you, and I wish you a productive and engaging time at this year's Invest ASEAN. Wabillahi taufiq wal hidayah. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Thank you, Chairman. Let me now invite Maybank's new Group President and CEO, Dr. Khairul Sadiq Ramli, to say a few words about Maybank's vision and commitments in a post-pandemic era. PCO.
Thank you, Seng Yao. Assalamualaikum warahmatullahi wabarakatuh. Good morning to everyone. The reopening of borders is lifting growth of the ASEAN 6 countries under our coverage in the first half of 2022. Vaccinated individuals can easily travel to these countries. People are returning to offices. Mobility indices have largely gone back to pre-pandemic levels. Needless to say, markets remain cautious of global headwinds from monetary tightening, a US and China slowdown, and the Russia-Ukraine war. What gives me optimism is how we can move forward together. Companies that forge ahead with their sustainability ambitions are expected to be more compelling investments. Analysis by Maybank shows that sustainability actions have a positive impact on an organization's performance. Maybank backtested about 190 companies under its research coverage across ASEAN 6 markets and found that those with higher ESG ratings, such as measured by Sustainalytics, generated excess returns over the MSCI All-Country ASEAN Index by 8.4% year-on-year and 3.9% per annum for 3 years to 31st March 2022, respectively. Ladies and gentlemen, Maybank is committed to sustainability alongside digital innovation and building new value drivers. The bank has set a commitment to achieve a carbon neutral position of our own emissions by 2030 and net zero carbon equivalent position by 2050. Some of the initiatives include committing to purchase Malaysia renewable energy certificates, equivalent to 70% of the Malaysian operations' Scope 2 carbon emissions. We are the first bank in Malaysia to do so. As the largest banking group in Malaysia and fourth largest in ASEAN, we aim to truly become part of our clients' journey towards sustainability. Of the commitment to mobilize 50 billion ringgit towards sustainable financing by 2025, the bank has already achieved over 13.6 billion ringgit in the financial year ended 2021. Maybank's purpose is to humanize financial services, to make it seamless to bank with us, to be inclusive in our approach, and to work with stakeholders for the betterment of their well-being, while creating and preserving wealth. Our ambition is to build a future of shared prosperity and a sustainable ASEAN. It feels good to be back at Maybank, and I look forward to reconnecting. Please do not be shy to question and challenge our panelists, and let's work together to frame a future for ASEAN. Wabillahi taufiq wal hidayah. Assalamualaikum warahmatullahi wabarakatuh. Back to you, Seng Yao.
Thank you, PCO. Now, for our next session, I'm delighted to invite two of my esteemed colleagues from Maybank Research to provide some context about their recent works around the ASEAN regarding its outlook as well as their views on capital flows. We now connect directly with Dr. Chua Bin in Singapore, our co-head of macro research, and Anand Padmakandan in KL, our regional head of equities research. Bin, Anand, please take it away.
Thank you, Seng Yao. Welcome to Invest ASEAN 2022. My name is Bin. I'm an economist at Maybank. This year's theme is Framing a Future, where we hope to explore how ASEAN's future might have changed and will look like after the 2 long years of the pandemic. A Ukraine-Russia war that is shaking and reshaping the world order, and a US-China superpower economic and tech contest where ASEAN might benefit or be divided by what is increasingly a bipolar world. Reopening is lifting growth in the first half, but crosswinds threaten to douse the momentum by the second half. On the reopening boost, ASEAN is relaxing border controls after 2 long years of periodic lockdowns. Mobility indices have largely returned to pre-pandemic levels. Vaccinated visitors can now enter without quarantine in all ASEAN 6 countries. Laggard sectors like aviation and hospitality will now catch up and support the recovery. Tourism revenue is important, accounts for a large share of GDP in some countries, particularly Thailand, 11% of GDP, Vietnam 10%, and Malaysia about 6%. But China's zero COVID strategy and stricter restrictions in Northeast Asian countries, Japan, Hong Kong, and Taiwan, will cap the upswing. But recall that open borders can also cut both ways. More Singaporeans traveling abroad, for example, could reduce domestic spending at home. Rising commodity prices will help some ASEAN countries, but generally has a very uneven impact, supporting commodity exporters like Indonesia, which exports gas, nickel, palm oil, coal, and Malaysia, which exports oil, gas, and palm oil as well, but generally hurts the rest of ASEAN and Asia. Emerging global headwinds because of the Russia-Ukraine war, China's lockdowns, and global monetary tightening may roll the reopening tailwind and douse the recovery. Three major shocks. First, the inflation shock. Second, an impending interest rate shock. And third, the potential recession shocks will undercut ASEAN's economic recovery by the second half of the year and next year. So we're forecasting ASEAN 6 GDP expanding by 4.9% in 2022. That's down from 5.4% at the start of the year, but risk still remains on the downside. So first, the inflation shock. ASEAN's inflation has been climbing, but remains low compared to developed and other emerging markets. Few subsidies and price controls are containing inflation. Singapore's the exception because of the earlier reopening and strong recovery. But inflation is picking up quickly with higher commodity prices, the reopening boost, and few subsidy cuts. Thailand is tapering its diesel subsidy in May. Indonesia plans to raise fuel and LPG prices and electricity tariffs. Malaysia is planning more targeted fuel subsidies. And ASEAN's labor market is recovering now with the reopening and wages are rising. So ASEAN 6 inflation is now forecasted to rise to about 4.5% by the second half of this year. That's up from 3% in the first quarter. Second, emerging interest rate shocks. Fed hikes may force premature tightening despite the nascent recovery in ASEAN. The Fed will hike the funds rate to about 3% by the end of this year and 3.3% by the end of next year based on the futures market. The MAS has tightened aggressively. Bank Negara and the Philippine Central Bank has moved with their rate hikes, and we're expecting other ASEAN central banks to continue tightening in the coming months, including Indonesia and Vietnam. Rising US interest rates may spark capital outflows and pressure ASEAN currencies, forcing ASEAN central banks to tighten by more than otherwise, despite the nascent recovery. A repeat of the 2003 taper tantrums is, however, unlikely given the larger foreign exchange reserves and lower foreign investor positions. The current episode represents also a broader US dollar rally, not a specific ASEAN currency sell-off, and impacts all other currencies like the euro, the Japanese yen, the British pound, and not just ASEAN. But tighter global monetary conditions and rising interest rates will dampen ASEAN's recovery. So our recession model, based on the 3-month, 10-year yield spread, is estimating the recession probability at 6% in Singapore and 5% in Malaysia over the next 12 months. Still pretty low. The New York Fed model is forecasting only a 4% recession probability, but the odds will rise as the Fed hikes. We think a Fed funds rate above 3.5% will likely tip the US and trade-dependent ASEAN economies into recession. And all this is happening when the pandemic is not entirely over, and fiscal space is a lot more limited, given the huge increase in the public debt. ASEAN is more resilient, but it's good to be prepared for volatility and surprises. Thank you, and over to you, Anand.
And thank you, Hugbin. Good morning, everyone, and to all clients and colleagues in Singapore, Thailand, Indonesia, Vietnam, the Philippines, and virtually, thank you for joining us today. My name is Anand Pathmakanthan, the Regional Head of Equity Research for Maybank. Now, while my colleague Hugbin has articulated numerous macro challenges facing the region, ASEAN equity markets as a whole have been relative outperformers year to date. And this is mainly being underpinned by three factors. Firstly, accelerating broad economic reopening into 2022 as vaccination rates have surged. This is supporting corporate earnings and GDP recovery. Secondly, predominantly old economy-dominated equity markets in the region that have seen their defensive and valuation attractions boosted by years of relative underperformance and deflated foreign ownership. In particular for Malaysia and Indonesia, their sizable commodities-related weightings have also helped. And thirdly, a comparatively less aggressive multi-speed monetary policy, normalization and tightening. supported by a range of ex-monetary policy interventions and measures to mitigate inflationary pressures. Now, is this outperformance sustainable? Well, for now, with Fed tightening still in its early stages and energy and food inflation still raging, the aforementioned supportive drivers for ASEAN markets remain intact. However, the second half of 2022 appears a more difficult proposition, given the drag from now rising regional interest rates and more tangible fallout from China's GDP deflating lockdowns, China being ASEAN's largest trading partner, as well as a key source of FDI and tourism. Further, evidence of peaking US interest rates and inflationary pressures could result in capital outflows as global investor risk appetite recovers. In particular, there could be a reversal in the global derating of growth and technology stocks in the face of sharply rising interest rates. This has resulted in sharp declines in the US and North Asian equity markets. At the same time, the related switch into value stocks has been a big boost for ASEAN equity markets, which are dominated by old economy sectors like banks, utilities, telcos, and consumer stocks. Now, foreign ownership in ASEAN equity markets has been trending down to near historical lows over recent years. However, Indonesia has now seen sustained foreign buying over the last 12 months, while an extending positive turn is also evident for Thailand and Malaysia. Among the sectors that have seen the biggest foreign inflows are banks and financials, which provide the biggest weightings in the respective benchmark indices, and have also come through the pandemic with fundamentals intact and also being positively leveraged into rising interest rates. Now, in the case of Singapore banks in particular, their US dollar funding makes them excellent proxies for supply chain relocation out of China into ASEAN. The second sector that foreigners have been buying into is commodities, principally in the net commodity exporters like Indonesia and Malaysia. The commodities in question include gas, nickel, palm oil, coal, and oil. And finally, foreign buyers have also been evident in reopening beneficiaries in consumer retail, gaming, and travel. Now, notwithstanding this return of foreign buying interest to the region, evidence of a positive structural shift in foreign investor perceptions of ASEAN's attraction as a long-term investment remains relatively weak. Current buying interest appears primarily tactical in nature, i.e., funds are seeking a relatively low beta safe haven from global market turmoil, or a trade on the commodities price surge. Now, should market risk factors like geopolitics, China lockdowns, interest rates, and inflation start to ease, there appears to be little in the way of systemic reforms in the ASEAN region, be it less populist politics or progressive economic policies, that could keep foreign funds interested over the long term. As reflected by Google Mobility Index data, economic reopening and the ending of lockdowns as vaccination thresholds are reached has normalized intra-country people movement to pre-pandemic levels, while the subsequent relaxation of international borders into the second quarter of 2022 has seen a rebound in air traffic and inter-country mobility. The rebound in domestic mobility benefits the broad economy, particularly consumption-linked sectors such as consumer retail, as well as the retail REITs, where we are seeing footfall recovering in malls, even as rental rebates decline. Now, the reopening of international borders will most directly benefit the aviation sector, especially airport operators. Tourism proxies will also gain, and these would include hotels, leisure, and hospital groups that are recipients of medical tourism. Sector winners in an inflationary environment would include commodities exposures, such as oil and gas and palm oil, also consumer staples, where demand is relatively inelastic and pricing power is strong. We would also talk about banks from the perspective of higher inflation leading to higher interest rates, which are generally good for net interest margins. And finally, we would also look to the green energy stocks, as all countries will be accelerating their transitions in the face of surging energy prices. Finally, a key loser from eroding real disposable incomes is consumer discretionary stocks, where demand is elastic and pricing power is weak. With rising inflation will come rising interest rates, and this will be a broad headwind for corporate earnings, especially for companies with leveraged operating models. However, the positive is that ASEAN corporate leverage is relatively modest and well structured. A clear beneficiary of rising interest rates would be the banks, where higher interest rates should reverse a prolonged period of net interest margin pressure. And this is especially so for banks with high CASA ratios. Now, with ASEAN rate hikes likely to lag the Fed and China's unwavering zero COVID strategy, regional currencies are set to remain under pressure versus the US dollar. Now, this is a big boost for local cost exporters, especially the tech and manufacturing sectors, but it will be a margin squeeze for importers of US dollar inputs. And this would include commodities, auto parts, and media content. Now, to conclude, our ASEAN country heads of research remain constructive on market upside, especially as first quarter 2022 reporting has generally delivered on expectations of a sharp earnings rebound post-economic reopening. Now, a broadly favored sector is banks and financials. Besides being economic proxies, valuations are attractive, high capital ratios mean dividend upside, and rising interest rates are a margin tailwind. We also like the consumer and property sectors across the region, though we are more selective given the inflation issues. As mentioned, we prefer staples over discretionary, and also given the interest rates headwinds. Generally, we prefer consumer stocks in the less leveraged economies like Indonesia, the Philippines, and Vietnam. And finally, from a structural perspective, Indonesia and the Philippines stand out for aggressive corporate tax cuts initiated during the pandemic. We also look at the Singapore banks and Vietnam as a whole as the best plays on supply chain relocation. Thank you, everyone, and I'll see you at the Malaysia panel later.